Gold has been jockeying around that key $1,200 level. And Tom, let's take a look at the 5-day because you can see it's been pretty volatile, going from 1170, failing to break and hold that 1225, and here we are back again in the 1210s.
Yeah, still stuck in that range, right? So every time we get through a technical number, you know, we got through the 100-day, flirting with the 200-day. But what wound up happening, I think, is that a lot of things weighing on gold. We had the strong dollar yesterday and today. And then, of course, this morning, which I think was the real catalyst, because yesterday the dollar was fairly strong and gold really hung in there. It was kind of surprising, actually. It held its gains from the previous few sessions. And again, this morning, you know, euro down, dollar up, gold was still hanging in there above some key levels. But then when we had that news, the housing was somewhat positive. There was some housing news that kind of shows you where gold is kind of correlating to more, you know, interest rates, when the Fed is going to raise rates. So that seemed to be more of a catalyst. I mean, you had the euro really take a dive in the past 2 days, and gold hung in there even until this morning. And then the big news obviously was positive numbers, just showing that the market was probably long here, and so they kind of puked them out.
Well, it seems like the key fundamentals here is what's happening with the dollar and other currencies, and of course what you said with interest rate hike speculation. Going into trade on Wednesday, we have FOMC minutes, and while there's not an expectation of a change there, you're really going to see gold jockey around that because of the continued conversation of interest rate hikes. What are your thoughts there? What ranges do you have to look at? Because you could see some volatility around the release of the minutes.
Yeah, I think this was a pretty significant failure in gold. You know, people started to get a little bullish above these moving averages, you know, the technicals. But it just goes to show you that the interest rates really are driving this market. Just like I said, the dollar was strong for 2 days and gold hung in there. So, which was yesterday caught me off guard. I really thought the market would have come off more significantly with the euro coming off like that. And then this morning it was down again. But only until those numbers came out did people really liquidate their long position. So again, it's always counter to where the structure of the market is. Market was long, some bearish news in gold came out, and it dumped.
Okay, thanks very much, Tom.
Anytime.
For TheStreet in New York, I'm Jill Malandrino.